Right, by the end of this video, you're going to learn about one of the riskier things in my portfolio. It's not stocks, not index funds, it's something called a carry trade. Here's how we're going to do this in 3 steps. Number 1, what is a carry trade? Borrow low, invest high. Number 2, the risks of Forex, foreign exchange, and how currency moves can wipe you out, or wipe me out in this case. Number 3, and my actual strategy, USD and CHF. What am I doing? 5-to-1 leverage, 150 quid a month. Let's have a look. This is not for beginners, this is not safe, but it's interesting and I want to show you how it works. Let's go. Heavy disclaimer before we start. I'm a teacher, I'm not a financial advisor. Nothing in this video is financial advice. Foreign exchange trades are incredibly risky. My advice is actually just don't do it, but I do think it's quite interesting. So I'm showing you mine, I'm not telling you to copy it. I'm showing you what I'm doing. Do your own research, only risk what you can afford to lose. All right, let's go. Most of my videos so far have been about stocks, dividend investing, index funds, that kind of thing. Slow, steady, boring, but that's most of my portfolio. But I have one small position that's a bit different. It's what's called a carry trade. It's riskier, it's more active, and for me, if I'm honest, it's lots of fun. If you know what you're doing, which I don't, but I still find it fun anyway. Today, I'm gonna show you exactly how it works. The opportunity, the risks, and the actual numbers, but let's start with the basics. Part 1, what is a carry trade? A carry trade is a simple concept. You open a position, you borrow in a currency with a low interest rate and sell in a currency with a high interest rate. You pocket the difference, and that's what is called the carry. That's the carry. A classic example is the Japanese yen. For years, Japan had interest rates almost zero. Traders would borrow yen for essentially free and then trade it against something like the Australian dollar, which I think was about 3% at the time. Every day they earned interest on the difference. It worked really good, it worked great until it didn't. When the yen suddenly strengthened, an entire position could be wiped out. My version is USD CHF. It's a little bit different. I have an open position in US dollars and the Swiss franc. Why these two currencies? The US dollar has a very high interest rate compared to the Swiss franc. This creates a positive carry. My broker pays me 0.007% per day for that carry trade. It doesn't sound like much, but let's have a look to see how it adds up. Quick question, have you ever heard of carry trades before? If you have, if you haven't, comment below. Let's have a look. If you think I'm being a bit of an idiot, tell me. If you've ever traded a Forex before, drop the pair. Right, here's the thing about carry trades. The daily carry is small, but the currency exchange rate can go up and down, and it can move percentages in a single day. Let me show you what I mean. Right now, the Swiss franc is strong. With all what's going on in the world, people see the Swiss franc as a safe haven. The USD CHF exchange rate has been falling. This means that the US dollar has been getting weaker and the Swiss franc is getting stronger. If you're doing what I'm doing and holding US dollars against Swiss francs, that's bad. A falling exchange rate is bad. It can erase your carry profits, which in my case, it has erased my carry profit. And if it keeps on going, you lose money, a lot of it. Carry trade small. Let me give you an example. My carry trade, 0.007% per day. That's roughly about 2.5% per year. But the US dollar Swiss franc exchange rate can move 1% in a week. A 1% move wipes out 5 months of carry trade profits. We call it the interest rate differential. So my accumulated swaps, the money I'm getting, could just be wiped out, just like that. That's the risk. Some people call it, they say it's picking pennies in front of a steamroller, because you're picking up the pennies and the steamroller is right behind you. So when the currency changes, it hurts a lot. Now, let's add a bit of leverage into the mix. Mix it up a bit of risk. I'll explain what leverage is in part 3, but right now let's make it simple. Leverage multiplies both your gains and your losses. So that 1% move could magically turn into a 5% move. So 1% gain could become 5% gain or a 10% gain, or on the flip side, 5% loss or a 10% loss. This is not a safe strategy. This is a high risk, high effort strategy, and that's why I keep it as a really small part of my portfolio. Here's a question, what's the riskiest thing in your portfolio right now? Comment below, because I'll compare it to mine. You know, I think I've been reasonably honest so far, and I've told you about all the money that I keep losing. But let me know about you guys. How's it going? Part 3, my actual strategy. Hang on, let me have a sip of coffee. Right, let's have a look at my actual numbers. I have an open USD HF position. It's not massive. It's a tiny part of my portfolio, and I'm using 5-to-1 leverage. So what does that mean? It means for £1 of my currency that I have, I am controlling £5 worth of the currency. 5-to-1 to me is kind of the sweet spot. I think that's probably where my risk tolerance lies. Like Forex brokers will allow you, well in the UK anyway, will allow you to borrow up to 30-to-1, which is crazy. I can't imagine someone doing that. Well, I can. I can't imagine people doing that. But anyway, that's an easy way to lose money. I get meaningful implication on my returns. So that 2.5% then that we talked about before becomes 12.5%, right? So I've multiplied it by 5. 2.5 times 5, 12.5, yes. Could I lose a lot of money? Yeah. Would I still be in the game? Yeah. So, I mean, I'm happy. It's enough leverage to make it interesting. It's not enough to blow up my entire account. I'm planning on putting £150 a month into this trade. That's about 0.01 lots. Now, a lot is how you measure a Forex trade, basically. It's kind of the same reason with my £100 for stocks, right? The dollar cost averaging smooths out my entry price, and I don't have time to like try and time the market perfectly. Again, it's that old adage, time in the market is better than timing the market. I think that only works for stocks though, not Forex. But in any case, I'm quite happy to apply some of these stock picking principles to Forex. My broker pays me 0.007% per day. That's about 2.5% per year. So that 12% we talked about before, that's my upside. 150 quid a month, earning roughly 12%. You do the maths, or should I do the maths? Buy and hold, but on a Forex trade. Have you heard that before? I haven't. Now here's something unusual about my approach. Most Forex traders are in and out in a matter of days, or a week, or less. I guess that's a swing trader. Day traders are out straight away. They're trying to predict direction. I'm doing something slightly different. I'm applying a buy and hold strategy to a Forex carry trade. Why does it work for me? Because I'm not being charged crazy overnight fees, which happens. It does happen. The carry is positive. I'm getting paid to hold this because of the interest rate differential. That means I can just kind of leave it open. I don't have to be right about the direction this week or this month. And to be completely honest, right now, my position is running at a loss. I think I'm down 30 quid or something. The exchange rate moved against me. I've worked it out. It's gonna take about 6 months to get that back. And that's fine, you know, because I can dollar cost average into it. Over time, my average price improves. It's the same mindset I use for stocks. So you don't panic when a stock moves. It's the same with a Forex transaction. You don't panic. That's my motto, don't panic. Probably the most important part of this video is it's money that I'm not afraid to lose. It's not important money. I mean, all money is important, unfortunately, in this world we live in, but it's money that it's like gambling, essentially. It's like I've gone to the casino and I'm prepared to lose X amount of money. It's not bravado, it's strategy. That's the sensible thing to do. I can't be emotionally, as soon as money goes in any investment, you can't be emotional with it. You just have to let it go. If it goes to zero, I'll be annoyed, but my life's not gonna change. I'm not desperate. I'm not checking it every hour. I'm not panic selling, panic buying, or doing any of those things. I'm just letting it go. The funny thing about this, if the currency moves in my direction, I could make a lot of money overnight. But also the opposite is true, of course. That's the upside of leverage. Of course, the downside, I could lose it all. Or I could lose some capital, but you know, either way, I'm not too fussed, because I already decided that money is okay to lose. Right, here's the thing I like about this trade. I've only been doing it for about 3 months, but if I keep doing it every month, it might go up, it might go down. Honestly, I genuinely don't know. And there's something nice about that, you know, it's a mystery. Different to my usual stock picking strategy, where I kind of have an idea where things are going. Will I make money? I've got no idea. Will I lose money? Yeah, probably. But it's only kind of a bit of money. It's not like I'm putting all my savings into it. It's fun money, it's learning money, speculative money. And if it all goes to zero, I'm gonna shrug. And you might see a video of me crying about it in a year, and I'll be like, oh, I really cared about the money actually. But Like, this is kind of what's fun with investing. I want to try something new. Right, and also, let's be honest about the likelihood of a wipeout. It's not very likely. Let me put it into perspective. For my position to be completely wiped out, the US dollar would need to drop 50% in value against the Swiss franc. Could that happen? Yes. Will it happen? No. I really doubt it would. I mean, it might. You never know, but I doubt it. Because it's not a normal market move, is it? That's a crisis. There's probably a crisis happening there. So am I worried about losing everything overnight? No. Will I probably lose a bit of a chunk? Yeah, probably. Could I lose it all if the trend continues against me over time? Yeah, definitely. Will I get wiped out by a normal 5 to 10% move? No, no way. That's why I picked 5-to-1 leverage. That's why I picked this currency pair, because it works for me. It's real, but it's not reckless. That's the mindset for these high risk strategies. You don't really need to know the outcome. You just need to be okay with whatever happens. Why I keep it small. It's not most of my portfolio. Most of the money is in boring index funds and my 50 plus defensive stock portfolio. Carry trade is very small, speculative position. Why do I do it? Because it's interesting. Because it teaches me about global markets. Because it diversifies my strategies. But I could lose the entire position tomorrow and it wouldn't change my life. That's the rule. That's probably the really important part here. Only risk what you can afford to lose. That's it. Comment below. Do you have any fun money? Or do you keep it 100% boring stuff? Because I understand keeping it 100% boring stuff. But what do? Let me know. Let's see who's brave and let's see who's smart. Right, I'm going to quiz you again. What's carry trade? Carry is, and if you're in your mind just saying the carry is the interest rate differential, you're probably right. What's the biggest risk of a Forex trade like this? Currency moving against you. Not a big surprise. And I mentioned, this is a content question, this is specific. I mentioned my currency moved against me. Roughly how long did I say it's going to take me to recover using the accumulated swaps? Yeah, you're right. If you're saying 6 months, we'll see. So if I keep hold of it for 6 months and all things being equal, I will recover my money. We will see. Right, if you've not watched any of the first 5 of my videos, go and have a look. I'm trying to start this learning community and I really want, did I say 5 or 6? If you've not seen the first 5 videos, go and have a look. I really am trying to make a good learning community here. It's just because it's fun. This is a hobby for me. We'll see what happens. I might be throwing mud at a wall and nothing sticking, but you know, it's a bit of fun. Again, thanks for watching and I'll see you in the next one. Bye.